What's going on, guys? Russo Trades here. It's been a little while since I've been on the YouTube, but I just wanted to get on here and talk about some of the changes that have been made, the new things coming up, and just get a little in detail about certain things. First off, I'm working at a new job, so I'm working a night shift. I'm able to trade London session and New York session, which has really helped a lot. It's only been like 3 to 4 days, and things have progressed really a lot easier and a lot faster and better than before because I wasn't able to trade at my previous job. It would be really hard. So that's new there. The job's really gonna help speed things up with that. Um, got a new setup, got a new monitor, computer, keyboard, mouse pad, desk, chair, everything's new. So excited for that. It's really nice to have everything just brand new, good setup. And so Um, I am not trading with TopStep anymore or Take Profit Trader or Apex. The only thing I am trading with is my funded futures. I'm currently going to be sticking with them just because of their rules. And also I have a $150,000 challenge account that I'm over halfway to passing. So this will really be my primary focus right now. I'm definitely going to be getting into personal accounts eventually once I get my capital up more, but soon here I'm going to be funded with my funded futures and I'm really confident in what I'm going to be able to do. So for those of you in my Telegram, you can see that I started out trading inverses. Well, I started out trading retail concepts, then I found ICT concepts, then I was trading inverses, which is ICT concepts. But I kind of stopped trading inverses just because like this. Here's a perfect setup of how I trade. We on gold, we have a bullish SMT. We took out previous day's low. Silver is its correlated asset, so I can look for SMT divergence here, which is a smart money technique. And so as you see, we have a bullish SMT here. We did not take previous day low, so this asset is stronger. I want to long the stronger one, and I want to short the weaker one. Here we had a 15-minute market structure shift, closed above this high. We had a 15-minute fair value gap. That would have been your NG, and your TP would I will go for 1 to 2. But that's pretty much what I'm doing now. The reason I don't trade inverses is because there is inverses in here. When you study market structure and current order flow and where are we creating fair value gaps higher, or what are we sweeping? Are we creating fair value gaps lower? What are we respecting? What are we disrespecting? Things like that, then you'll start to realize that inverses are already going to be part of your trade almost every time. So I'll show you a trade I took last night. I actually showed it in my Telegram. So last night, let me delete all this because there's kind of a lot going on. The main thing I'm really using now though is previous day high, previous day low, previous week high, previous week low, previous month high, previous month low, and fair value gaps and displacement and market structure. That's really all I'm using. Trying to stay away from the 1 in 5 minute chart recently. So that's new, taking a lot less trades, but more high quality trades. So 15-minute trades have been really good. Always using daily, weekly, or monthly context because that's where the institutions are placing their orders if on the daily, weekly, and monthly chart. But this account's been growing really good. I think it's been like 2 weeks I've had it. And so I'm going to be sticking with my funded futures. Really excited for that to get funded with them again. Um, there's kind of a lot I want to go over. So if I leave some things out, I hope I can get it in the next video. Let me get replay mode going here. So we were here. I can actually show the execution. This is not like my preference. My preference is to take these setups like on Nasdaq and on like the more solid pairs looks really barcodey and ugly, but I mean it still works the same. So we took previous day low. We were after midnight here, and I seen we had I can go here. So we had right here, we had our market structure shift, and then obviously we had where is it? Right here, we had our fair value gap. So as we took previous day low, now we got a displacement back into the range. We got fair value gap and we had an entry just below. I think my entry was up here right at that's where I enter normally, the top of the fair value gap, so I don't miss the entry. Stop at the low. I'll explain how I do my stop. but I'm always going for a 1 to 2. In this case, I was targeting I targeted this fair value right here. The reason I targeted this fair value gap is because it is a 1 hour unbalanced fair value gap, and also we had triple equal highs here, so I felt it was a pretty good target. It was like a 1 to 2.3. Actually, it was a 1 to 3. My entry might have not been perfect to the tick because of spreads, a little bit of spread, but it was like a 1 to 3. Um, let's see if executions will show while I'm in replay mode. I don't think they will, but obviously we went pretty much straight to TP here. If I exit out of here, it'll show you my executions. There it is right there. So I think I entered 10 contracts. At about a 1 to 2, I scaled, I think 90% or 80%, and then I left a runner to the full TP. So that's pretty much a textbook trade. That's something I would take. After that trade though, like I was done for the day. I'm gonna show you that was early in the morning. So that was 1 o'clock in the morning. That was after actually while I was at work on my break. So let me remove all this. Why is it not giving me the option to remove everything? No. Remove. It must have updated trading view. My phone doesn't. Okay, so this silver trade is super textbook. I already kind of went over it, but like if I was still trading for the day, this is around 10:45, I probably would have taken this trade. It's not the most high confident because there's not red folder news on the day, and that's another thing that's new for me is I like having red folder news on the day. I like having SMTs. If the pair doesn't, if we don't have an SMT, it is what it is. But as long as we have, our sweep of liquidity, our structure shift with, good displacement, I'm gonna be buying these fair value gaps all day as long as it's you know, in the right area and in the right context. I need to have that higher time frame context. That's the one thing about when I traded inverses and why I'm kind of starting everything over. Not really starting over. This has been going really good just because I already have previous knowledge of ICT concepts and this is ICT concepts. I'm starting over in the sense of the way I execute and the way I manage my risk now is very mechanical. I'm entering at the fair value gap, my stops at the low, going for like a 1 to 2 or a 1 to 3. Set my break even at like, 1 to 1, 1 to 2, and I take some partials. It's just very mechanical. With inverses, the way I executed them at least, maybe I executed them wrong. We market execute. And so when you put your order, I would get a horrible fill. The risk to reward would be horrible. And also since it was a market execution, there was no way for me to calculate risk like this, especially since I was trading the 1 minute chart. So that was another thing as well, is on the 1 minute chart, there's 1,000 setups a day. How do you know which inverse you're going to take? And so now since I have this system of how I trade, thanks to Sir Pickle and Arjo and just certain people, the MMXM trader, certain people who are teaching ICT concepts, now I'm able to filter out trades and have a lot less trades, but a lot more high quality trades. And also being able to place a limit at the fair value gap, I'm able to calculate my risk accordingly and not be, stressed out. Way less stressed out trading just because of this. So I'm very, very thankful for this. It's all meant to be. It was supposed to happen this way. So just very excited. I can go to Nasdaq yesterday had a really clean the same setup I just saw or I just went over. It was right here. So we took our previous day high. We had our market structure shift here because it's a low being taken out. So you want to see your retracement. I guess you could have here, boom, stop at the high, 1 to 2. Let's see if you would have got a 1 to 2. Yeah, you would have got your 1 to 2. And let me explain my stop loss now. So it's not the most hard stop because I don't put a hard stop, but I do go for a 1 to 2. Let's say here I want to risk 500 to make 1,000. Right here, I'll probably risk 400, 300, 400 just because I'm okay with losing 500. The reason I say that is because if we come back up to this high, the high that created the fair value gap lower, if we come up to it and just wick above it like this, and then we close back in the range, or we never close outside the range at all, then like I don't have a hard stop, so I'm not gonna get stopped there. It's more so based off of like I've been stopped so many times, stopped out of trades that win that it's like I seen this concept from AF. It's a guy on YouTube. I'll put his link in the description, but he's an ICT trader as well. He's the one I learned this from, the not having a hard stop. So it's basically a candle close above your fair value gap candle. So now even if you sweep liquidity one more time, you're not going to get stopped out. If you close way above this and displace higher, okay, I'm out of the trade. And that's why if I want to lose 500, I'm okay with losing 500. I'm only going to risk, 3, 400. So if there is any extra, I'm still there. So this has really helped a lot as well. Not having a hard stop. I know in certain situations like NFP, CPI, FOMC, all these situations you do want to have a hard stop, but I wouldn't be trading news events like that anyway. I kind of those are the big three that I wouldn't trade. I feel like I don't know if there's anything I'm missing. Just kind of so much to say, but I'm gonna keep making videos talking about how I do it. I've still ICT concepts, still his 2022 mentorship, still the same thing, just not trading inverses, just following current order flow, current price legs, looking for breaks of structure, um, displacements. Honestly, it's just fair value gaps and highs and lows, looking for SMTs, good liquidity pools. Where are we headed? Like all this stuff, very important. I'll show you another trade I seen this morning. It wasn't the cleanest, but you know what? There was a better one than the one on YM. There was one on YM, but this was better. We swept previous day's high here. This is RB gasoline. I'm pretty sure it is correlated with CL, I believe. So this one was the weaker one. So since we're looking short, we want to short this one. We had our market structure shift. We had our sweep of our previous day high. I'm pretty certain we had an SMT up here with CL. So I would have went short here. Stop would have been above this high, 1 to 2. I mean, if you really want to stretch, you could go 1 to 3. But that was clean. I seen that. Obviously I took my one trade for the day and I was done. So once I get more accounts, then I'll take more trades. And what happened was I was funded with all these companies, things were going well, but a couple of tilt days without a solid risk management and money management plan can really just blow everything up. And that's kind of what happened. So I took a step back and I realized I need to redefine my strategy. I need to redefine the way I manage risk. I need to make it very mechanical. I need to make it very um just set in stone. So there's no ifs, ands, or buts. It's the same thing every time and there's no major losses. And ever since I've done that, my account has just been slowly growing and growing and growing. And it's pretty insane what a little bit of discipline and thinking outside the box can do. But yeah, no more inverses, still ICT concepts. Go check out Sir Pickle, Arjo. Still, I would still go look at dodgy stuff. It just wasn't for me after, a couple months. I had success with it, but I'm a more disciplined kind of guy and I like something that's more set in stone. So this is definitely a lot better for me. I seen this on US 30 today. So we were really displacing through the previous daily low. I seen we created this 15-minute fair value gap. I'm pretty sure was after market open. Yeah. So boom, we had that. So then I will go since that's another thing. Time frame alignment. I never used to use the right time frame alignment. I don't really use the daily, weekly, and monthly. I use the highs and lows of the daily, weekly, and monthly, but I don't really look at the daily, weekly, and monthly because normally when you're rating one of the highs and lows, there's always going to be some type of confluence that's going with it anyway. But you want to pair the 4 hour with the 15-minute, and then you want to pair the 1 hour with the 5, or you want to pair the 15-minute with the 1, or the 5 with the 30 second. But I don't use the 30 second. The 1 minute's already low enough. But I did see this setup earlier. It was really nice. We rejected the 15-minute fair value gap, and we created an SMT at the highs, which we already had a bigger SMT over here. So bearish SMT over here. Um, US 30 was YM was really weak. We had a bearish SMT here, and then we had a market structure shift and a displacement. Stop would be at the high, going for a 1 to 2. And this should play out. If it doesn't play out, it's because we don't have news and its price is really just funky right now. But we should go hit the low because this would be the external range liquidity, and this is internal. And price moves from internal to external. So that was another big thing. I used to always be confused in terms of like London highs, London lows. NWOG, NDOG, all these certain things. And then once I realized that price moves from external to internal and internal to external over and over and over. Once I realized that, I'm like, man, almost every trade I'm looking at is winning. And if it's not, it's a good loss because it was a good setup. And that's just how trading is. It's having the probabilities in your favor over time. And if you're good enough, you'll be profitable in the long run. So internal to external has been game changing. I can't thank Sir Pickle enough, Harjo enough, because they keep it really simple. ICT Concepts is great. I don't like the way he teaches it because it's very complicated. It doesn't have to be complicated. All you need is fair value gaps and highs and lows, a good money management system, manage your risk properly. Because I had a great system with inverses, but for me personally, with my personality, I couldn't manage my risk trading inverses just because I wasn't getting the greatest fills. I wasn't having like a set in stone stop. This is where your stop loss is every single time, and it's I wasn't able to filter out trades, so now I'm just getting more quality over quantity and not really, rushing the process, doing what I got to do every day and gonna get funded again. Gonna keep growing this account and making money and eventually not have to work no more. So this night job has been really good though because I'm able to trade, so I can't stress that enough. Make your situation most optimal for you to trade. I have been a lot less stressed out. It's been helping my trading. I have been looking at Forex pairs, thinking about putting some money into a personal account just to trade, just because Forex, it's not as good as futures, but there is a lot of opportunity here, and there is so many pairs that you can find SMTs with, like, and there's so many, you get one setup a day, and if your strategy is profitable, it's like, why not grow, a personal account with Forex, trade my futures prop firm, so that's really the plan here. And we'll see. I haven't funded this Forex account yet, but we're headed in the right direction. I'll show you. I'll try to find a setup on Forex actually. I think I seen one on Euro NZD last night. So here it was right here. It was around 2 a.m. Swept previous daily high. Market structure shift. If you guys can't see it, it's right here. We had a displacement down lower, creating fair value gaps. Very important, fair value gaps. Fair value gaps equals displacement. Displacement equals fair value gaps. Without fair value gaps, we have nothing. Without market structure shifts, we have nothing. Without liquidity sweeps, we have nothing. So pay attention to the fair value gaps. Your entry could have been this first one. If you weren't confident in this one, you could have entered on the second 15-minute leg, put your stop at the high. But here would have been your first entry. You would have went here. If computer's a bit slow right now, need to work on speeding it up. Maybe it's just Zoom, takes a lot of bandwidth. So there's your 1 to 2, boom, easy. And let me show you, SMT would have been, I think, let me get double screen. Let's see here, GPB, NZD, GBP, NZD. So we're lagging quite a bit here. All right, so we're here. All right, so you know what? There was no SMT here, but we were above midnight opening price, so that's important. That's another price level that's very important. Midnight opening price, keep an eye on that. You don't really need 8:30 opening price, but midnight is definitely important. Um, so there was no SMT here. I think it might have been on the higher time frame. Like here, you see it here. Okay, that's what it was. So it was over here. It might have been looking at the 1 hour, the 4 hour, but we had an SMT here from this high to this high. Boom, right there. So that was your SMT. If you keep an eye on it, I mean, you'll see little things like that. But that definitely gives you more, confirmation that, we have an SMT and we got a displacement lower. Like that's exactly what we want to see. Very, very important. So that was a textbook setup. I mean, it doesn't get better than that. And this happens every day on, Forex pairs, futures pairs. I've even seen it work on crypto pairs. Kind of everything's fractal. So since you see me using a daily high or a daily low, and then I'm dropping to the 15 minute for my entries and stuff, you can use, a weekly level, weekly fair value gaps, weekly highs and lows, and then drop down, to the 1 hour or the 4 hour, and monthly fair value gaps, monthly highs and lows, and drop down to the 4 hour or the daily. But I just choose to right now stick to the daily levels and go to the 15, or I can use a weekly level and go to the 1 hour. And then from the 1 hour, I can scale down even lower to a 5 minute and get, models inside of models just like that. So it's all zoomed in and getting even more accuracy, more precision, more probability. You can go from the monthly, use a monthly level to a daily level to a 1 hour level to a 5 minute level. And then you can even go down to a 30-second level. I've seen people do this. So it's just one model layered inside of each model. And it's just like that. It makes it more accurate. Your win rate goes up, your risk to reward goes up, and this is just the way I think this should be done. And with inverses, I did not pay attention to the higher time frame too much. I kind of was I was lost. I really thought the market traded in terms of inverses. Obviously I had the right idea in terms of okay, we inverse this, we should go to the high in terms of liquidity and displacement, but it's just different. This is more set in stone. I like it. It's been working. I've been using it for quite a while now. Like 3 weeks, and already before that 3 weeks, I've only been testing it for 3 weeks, but I've been studying it and back testing it for more than 3 weeks. So 3 weeks on the live market already. It's been good. Can't complain, but that is with previous experience, so keep that in mind. Go watch Sir Pickle stuff, Arjo stuff. I still recommend you go watch Dodgy stuff. Maybe it'll work for you. For me, I just have a little different twist on how I want to trade ICT, and that's how it is. Everybody who watches ICT ends up trading ICT's concepts, but they all trade just a little different. They have their own thing that works for them. And so that's kind of what I've been doing. And thanks for tuning in. If you have any questions, let me know. Any video suggestions. There's going to be so much to talk about when it comes to this, so many little ins and outs to it. Sir Pickle does have all the answers to those questions though, and Arjo on the YouTube, because there was kind of not a lot to learn. It's just fair value gaps, highs and lows, but going from inverses to this is like, well, it opened my eyes to. I didn't even really know how to read order flow. Um, I didn't really look at market structure. So anyways, thanks for tuning in. It's good to be back, and yeah, everything's been good. So I'll see you guys in the next one. Thanks for supporting, thanks for tuning in, and God bless.